What type of life insurance is right for you? That's a question that I get all the time, and ultimately at the end of the day, it is a very complicated question that if you talk to 50 different people, you're gonna get 50 different answers on the right solution. And so rather than telling you what I think you should do or what product I think is best, I'm gonna walk you through a process that I go down in getting people to really understand not just what life insurance is, but why it's important, the roles that it can fill in their life, and the things they should consider and contemplate before making a decision about term insurance or whole life insurance. What kind of term insurance? Is it convertible term or just cheap term? Should I do whole life insurance with high early cash value, or should I do an all-base policy? Or like, what kind of design, what kind of insurance, and what are my needs and long-term goals and short-term needs and all these different things, and how does life insurance play more holistically into my financial plan? We're gonna cover all that in this video, so if you haven't already and you enjoy videos like this, subscribe, hit the bell, that way you're notified every time I launch a new video. Let's go. Hey, what's going on, Cashflow hackers? It's Chris, and in this video, we are talking about what type of life insurance is the life insurance for you to buy. And you know, it's not a surprise. I do a lot of conversations on this channel about whole life insurance, the power of whole life insurance. And so in this video, what I want to do is I really want to focus on the education behind not just what, but why life insurance is so important to you. And when you understand why it's so important, and you understand the problems that you're looking for this product to solve in your, not just your life, not just like taking care of your family, but your overall financial plan, and you reframe in your mind how powerful this tool can be for you from accomplishing your goals, I think it changes the game. Now, before I get into that, what I want to do, I don't know if you've read this book. There's a great book. I think it's probably one of the most popular self-development books of all time. Stephen Covey wrote a book called 7 Habits of Highly Effective People. And in that book, he talks about the importance of reverse engineering your process. You got to begin with the end in mind, and then you got to reverse engineer a process to get there. Because if you know where you want to go, if you know what your life looks like, you know, in the future and what you're trying to create, then you can reverse engineer a roadmap to accomplish success. And if you don't know where you want to go, then any road will get you there. You could just drive aimlessly across the country, and wherever you end up, you end up. And I promise you, it's probably not going to be the optimum destination, right? And so the idea is being really intentional about thinking, getting our mind and our heart and our actions in alignment with accomplishing the goals to live the life that we want to live, leave the legacy we want to live, create what we want to create for our families. Because make no mistake about it, your financial plan is going to have ripple effects for generations. And thinking that you're going to be able to do your financial planning without taking life insurance into consideration, and I should put a caveat to this. If you are somebody who believes that we have an obligation to leave the next generation better off than what we inherited, not just with money, but with financial principles and rules and systems to be successful, well, that's what I'm talking about. So all that said, now, what I want to do is I want to go to my board, as I like to do so often, and I want to talk about the concept of human life value. So here's the deal. I want to talk, use an example here. So let's build a case study. So we got a 30-year-old. They have 3 kids. Oh man, let's make them 35. I don't know. I mean, I know there are 30-year-olds with 3 kids, but let's just make them 35, he or she. 35, 3 kids, married, right? Earning about $100K a year, okay? Okay, so when we look at this case study, it's important to understand, when you go get insurance, the question is, why do you want insurance? Well, why I want insurance is to make sure that my 3 kids live the life that I want to live, to make sure that my spouse is taken care of, that my debts are paid, and that that they're not burdened by the tragic loss of me, right? Like, hopefully it would be tragic if they were to lose me, right? And so we want to make sure that that burden is mitigated, right? And so what we look at here is, a lot of people would say, if we think about the traditional process of buying insurance, a lot of people would just say, well, go get 10 times income. So in this situation, people would say, well, if you just have $1 million of insurance, that's enough insurance, because 10 times 100,000 is $1 million. And that would say, well, if your spouse had $1 million, that would take care of your kids. that would take care of your mortgage payment, it would take care of lifestyle, and it is what it is. This 10 times income rule is one of the most inaccurate rules, I think, in all of financial planning. And people that utilize that are not really truly understanding the true power of life insurance. And I think in order for you to understand what type of life insurance is right for you, you have to understand what role you're trying to utilize this product to play in your personal finances, what problems it's trying to solve, and how you can actually leverage it to make the rest of your assets and the rest of your financial planning better and more efficient, right? Like that's what it's all about. If we focus on financial efficiency, well, then we can actually get more run and our dollars to perform multiple duties and to accomplish more with less effort. That's the definition of efficiency. That's what we're talking about. So when we look at this, well, okay, let's take into consideration the fact that $1 million, our kids just going to college these days are going to be like $600,000 in college. So that's going to eat into the million, and then our mortgage payment. And now, okay, let's say we have $400,000 of debt on our mortgage. Well, now what's my wife going to live off? Or if you're a woman, what's your husband going to live off, right? Like at the end of the day, $1 million doesn't even come close to cutting it. But this is the traditional advice that's given out there. And I think I can't tell you how many people I talk to that earn $50,000 a year, and I say, hey, well, how much insurance do you have? And they say, well, I have $250,000, and they feel like that's right. The problem is they're leaving their family less off. Now, when I look at this and I go, why do I want insurance in the first place? It's because I want to make sure that if something happens to be, my family is able to live the life that I planned on creating for them. To me, nobody needs life insurance, right? I don't need life insurance. My family's the one who needs a life insurance if something happens to me. So life insurance is a character purchase. It's a purchase that you make because you love the people in your life enough to provide for them, even if something tragic happens to you. So when we look at this and we go, all right, there's something that I think is really important for people to understand. I don't know if you know this, but you have the ability right now to buy your net worth. What does that mean? I'm not saying buy your net worth, because if you're this person right here at $100,000 a year and you have maybe a couple $100,000 in home equity and you have no other money saved, well, your net worth is a couple $100,000, and maybe it's even a negative net worth if you got a lot of credit card bills and no savings and you got some debt and you're just not in a good spot. So, well, why do you want to buy your net worth? No, you don't want to buy your net worth now. You can actually purchase future net worth from a legacy planning perspective, because every single person in this world has what's called a human life value, HLV, human life value. What is a human life value? This is the number that the life insurance company says that they believe that you have. And what does that mean? That means saying if you earn $100,000 a year in that spot, they're going to say, listen, based on the fact that you're 35 and that you got a long lifetime of earning, say 30 more years of earning ahead of you, plus you have some debt, plus you have kids, they're probably going to say, well, you could get up to 40x income. Why? Because this is saying your human life value is 40 times what you earn. Because if something happened to you tomorrow, for you to live a long, you're going to lose all your lifetime potential income. And that is the human life value impact, negative impact that it would have on your wife and kids and your community, right? Like, so what they're going to say here is they're going to go, all right, I'm going to just talk about me, pretend it's me in that situation. They're going to say, okay, Chris, if that's you, you have a $4 million human life value. So when I talk about like what kind of insurance is right for me, I don't even want to think about what type of insurance I want to buy first. What I want to think about is, what is my human life value? And when I think about what my human life value is, then I look at this and I go, well, holy cow, I have a $4 million impact. That's pretty cool. Now, I don't know a lot of people right now that are making $100,000 that believe they're going to get to $4 million relatively easy or anytime soon, right? So to know that you have the ability to lock this in from a legacy perspective, I want you to pause right now and I want you to think about the fact, what would it feel like to know that you could lock in place right now a plan that no matter what happened, you were able to make a $4 million impact from a legacy perspective? Now, there are things you want to do, that you want to set up trusts and you want to, set up rules to manage this money. That way you're not just leaving your spouse and your kids and your heirs $4 million with no boundaries and no parameters and no rules to operate with that money, you absolutely want to do this. But you have the ability to purchase your future net worth, to purchase your potential net worth, to lock in your lifetime legacy impact in this world. And that is the most important part as we get started with this. Now, as I get back here, when we look at this, the biggest thing is this, is that now we go, okay, now we have to look at cash flow planning, right? So if we're making $100,000 a year, what from a cash flow planning, that's about $8,333 per month, you know? And so, you know, that is what it is as far as income goes. But out of the $100,000, let's say, what do they say? You should be able to save 10% per year. So let's say you're free and clear cash flow, CF, equals $10,000. If your free and clear cash flow equals $10,000, a lot of people would say, well, you want to go out and a lot of people would say, well, buy term and invest the difference, or put all your money into whole life insurance. A lot of people would say, just buy life insurance, get whole life insurance, focus on getting a banking policy. The life insurance component doesn't even matter. That's just an ancillary benefit. It's one of my biggest challenges with these people that focus on infinite banking and don't really take the life insurance component into the equation and try to downplay the importance of life insurance. I have a big problem with that. And so when we look at this, we say, all right, $10,000 on the free and clear cash flow. What is our goal? Our goal, first and foremost, is to make sure that our human life value is taken care of. So what am I going to do? My first step is take a look at term insurance. I want to take a look at term and I want to say, how much is it going to cost? A 35-year-old to get 20-year term, and by the way, 20-year convertible term insurance, and I'll explain this in a minute. To get a 20-year term insurance policy on a 35-year-old, I don't even know what the cost is. So what I'm going to do is I'm going to look at this $10,000, and I am looking at this, first and foremost, I'm looking at filling my human life value and making sure that my human life value is met. And I'm saying, all right, on a 20-year convertible term policy, I can get it for $2,530. That's the number. So let's just say $2,500 for the sake of round numbers and simplicity. So this is going to be allocated to making sure my human life value with term insurance is covered. And now, what is the next talk? I talk a lot about financial structure, financial foundation. I did a video a couple days ago on running your personal finances, like corporate finance runs finance for a business. And when you look at that and you understand it, well, the first thing we need to do is think about capital structure in our personal life. And that is safe money first, right? So now we have to build an emergency fund, and we have to look at what is the best design of an emergency fund. And well, a whole life insurance policy, a high early cash value, liquid, accessible fund for whole life insurance is one of the best places to build an emergency fund. And so now I'm kind of knocking out two birds with one stone. I've got my long-term human life value met. I'm going to be building my emergency fund. I'm saving $7,500 a month or a year into that, right? And now I'm gonna kind of check the boxes there. I'll build up my emergency fund. Eventually, I'll build an opportunity fund, and it's going to be able to help me. If we think it's going to be able to help me now, and it's going to be able to help me in the future, because think about this. Now I've got this thing. So what have I done? I've now, with this plan, I've bought my net worth. I've locked it into place, right? And now what am I going to do? I'm going to focus on building cash flow. This goes against the grain for most people that are following traditional financial planning and that just buy and hold and set their money aside and hope it's going to work out 30 years from now. But the bottom line is, if we buy your net worth and then you focus on building cash flow, the beautiful part about this plan, about implementing convertible term blended with whole life insurance that's designed for high cash value, now it's a perfect blend, because now what's going to happen is you're going to be able to take your cash flow as you build it, and over the 20-year period here that we have this convertible term, we have guaranteed locked in our human life value, because that convertible term is going to be there for 20 years, but we can convert small percentages of the $4 million of term death benefit, and we can convert that into more whole life insurance to build more cash flow, right? And if we're building cash flow, what we're doing is we're borrowing against the cash flow that's accumulating in our whole life policy, and we're gonna go buy cash flowing assets like real estate, businesses, and stuff of that nature, right? And so what's gonna happen as we go through life, we're gonna be in a much, much better situation if we stop thinking about, minimizing the importance of life insurance in our life, and we start focusing on, putting money into emergency, building our financial foundation first, buying our net worth, focusing on building cash flow. And as we do this, what's gonna happen is the whole life policy is gonna have cash flow or cash value, right? Is what it's gonna have. And what's gonna happen is you're gonna have other buckets. I'm not saying don't go invest. I'm not saying don't put money into real estate, but let's just say I have a real estate portfolio that's got, it's creating cash flow. It's got value. It's where I'm gonna take my retirement income. I could liquidate it for big sums of money if I wanted to, depending on the environment and what I wanted to deal with. I could refinance and do cash out refinance depending on the environment. A lot of tax benefits that go into it. That's one of the reasons I don't like stock markets. I'm a big believer. Use whole life insurance, put it into real estate. And I would say if you're interested, go down and link in the description below. I have a link for a free offer for my book, Cashflow Hacking, that is all about utilizing whole life insurance and leveraging it to accelerate the growth of your real estate portfolio from an investment, from a cash flow perspective. But here's the deal. As we get older, you have your other assets, right? Your other assets are gonna be there, and that's cool, right? You have your other assets that are gonna be worth money, that are gonna grow, and that you're gonna take retirement income from, right? That's what financial freedom is. Everybody calls it retirement income. It's just cash flow. That's all it is. What are you gonna do? It's cash flow planning. That's all we gotta do. Stop thinking about retirement planning, think about cash flow planning, and you're gonna be good to go. Now, on the other side of this, obviously, our cash value in our whole life policy is going to grow at $7,500 per year. You go out 10 years, and that's $75,000. You go out another 10 years, you're at $150,000. And this is just premium, by the way. That's what you've contributed is $150,000. But 20 years, if you've contributed $150,000, you'll probably have $250,000 available, right? So if you've got $250,000 available 20 years from now, and then 30 years from now, if you're 35, right now, and you're talking 65 retirement, you're gonna have contributed 225, and you'll probably have, I don't know, like 375-ish in that range, right? So in this situation, we have retirement income. So my goal by the time I hit retirement is to have 4 to 5x whatever my annual income is inside of cash value. Why? Because it's a great volatility buffer. It provides a couple rules. In retirement, whole life insurance provides medical protection. So I always call it medical directive. You control your medical directive because you have accelerated benefit riders. Become critically, chronically, or terminally ill, you have access to your death benefit while you're alive to pay for alternative medical treatments. It's a great volatility buffer. One of the things is like when you hit retirement, depending on where your sources of income are coming through right here, on negative years, the worst thing you could do is liquidate negatively performing assets. So in retirement, sequence of return risk is a real thing. Utilizing this 4 to 5 times having 4 to 5 times your annual income in cash value and whole life insurance allows you to leverage this money on a minimum basis to replace your income. And instead of taking income out of retirement vehicles like 401ks or IRAs, you take it out of your retirement volatility buffer, your whole life policy, on the years that the market performs poorly. That way your retirement income can recover, because the market always recovers eventually, right? Sooner than later, usually. And so we don't want to compound a problem, a negative return in the year, by taking income out of that, because that amplifies it, makes it so that money doesn't have the opportunity to recover. So use your guaranteed money. It's basically like a bond alternative. That's what it is. It's like, but it's better than a bond alternative, because last year was the first year that the market went down and that there was a loss in bond funds as well. So whole life insurance didn't lose any money last year, it still gained. So standard deviation is 0 with whole life insurance. It always has a positive year, whereas bond funds, there is a potential for loss. And these standard 60-40 balanced portfolios in retirement have been thrown on their head, and people got massacred that were relying on those, and their whole retirement plans for a lot of people were thrown on their heads, right? And so in retirement, whole life insurance plays this role. So in the meantime, think about it this way. When we talk about, I'm going to get back on track here, talking about why and what is the right insurance policy for you. Well, why is you want to buy your net worth, which is your future human life value. You get to buy and lock in your potential net worth now, and you buy that net worth, and then you work through cash flow planning to be able to accomplish and actualize this goal. It sets a track, it lets you start with the end in mind, and it helps you accomplish everything that you're setting out to accomplish. What do? You buy a blend of convertible term insurance and whole life insurance. It's always a combination. I would suggest everybody take a look at this and have a combination of the two. And here's the deal. A lot of people are worried about this, thinking like, I don't want to have too much insurance. I guarantee you, you cannot have too much insurance. The life insurance company is not going to let you have too much insurance. They're going to tell you what your human life value is. And if you're not insuring yourself to the max of that, I would tell you you're making a mistake. That is what my suggestion to you is right now. You want to maximize your human life value through convertible term insurance, and then make sure that you're utilizing, based on your cash flow ability, as much whole life insurance as you possibly can. As you go through life, what's going to happen is that you're going to have your human life value taken care of. Your net worth is going to be taken care of. That's the first thing. The second thing is you're going to build an emergency fund. Third thing is you're going to have a volatility buffer. The fourth thing is you're going to control a medical directive and have control over your medical needs while you're in retirement. And then you're going to have what I would call a legacy fund. And in the legacy fund, you want to have that owned by a trust, that you set the rules. You're in control of how that money is distributed between your heirs, your wife, your kids, grandkids. You can set up rules and manage your estate from the grave. So think about it this way. If your human life value is $4 million, how would you live your life differently if you knew that you could go and on a guaranteed basis create a legacy of $4 million that you were in control of, that you could leave to the next generation? How much differently would you show up in your life every single day if you knew that you were empowered on a guaranteed basis to put a plan in place that put you at the center of the success of your family for generations to come? So when we talk about what type of life insurance is right for you, this is the kind of stuff that you need to be contemplating and considering for your family, for your needs, for your desires, your goals, and what you want for your family in the future. So hope that makes sense. If you have any questions, if you are interested in sitting down with one of my team members, one of my partners, talking about what this could look like for you, walking you through this, because I understand it's a little complicated, by all means, reach out. We have a link down below in the description. It's a clarity call, free clarity call. I would suggest go check it out, set up a free clarity call. It's designed, we call it a clarity call simply because of the fact that, like, we're not selling you. We're just trying to help you have clarity about all this stuff in your own life, get a perspective, open your mind to it, and help you answer any questions that you have so you can make a more educated and informed decision for you and your family. Like, that's ultimately what this is all about. And if you're an agent and you're looking to learn more about this, you want to join a team, we are always looking for the right people to join the team. So by all means, down in the description below, you can check all that out. But hopefully you found value in this video. If you did, share it, like it, get it out there. If you haven't already, subscribe and hit the bell. That way you're notified every time I launch a new video. Till next time, have a blessed, inspirational day. We'll talk soon. See ya.